If you have failed your funding challenges or even funded account many times, I can tell you 8 out of 10 times the reason why you failed your funding challenges or funded accounts was simply due to poor risk management. Risk management is the most important thing that you should master as a trader if you want to be a consistent profitable trader. So in this video, I'm gonna share a complete guide for risk management if you're struggling to pass the ProFirm evaluation and become a profitable funded trader. So let's start with the fact that why you failed the evaluation. So let's just take an example of a 100k account that you are trading a 100k challenge, and the firm that you are trading with, it has 8% profit target for phase 1 of the evaluation and 5% profit target for phase 2 of the evaluation, and they're giving you 10% overall drawdown and 5% daily drawdown. Now that's the industry standard these days. Now you have this 10% overall drawdown, of course, and you have 5% daily drawdown, meaning that you should not be losing more than 5% in a day. And if you lose more than 5% or even 5%, that means you have simply failed your evaluation. Now what traders they do, that they start with 1% risk, and when they start with 1% risk and they happen to lose the very first trade that they are taking, so let's just say in the very first trade of the evaluation, you are risking 1% of your account balance, which is basically 100k account balance. That means you are risking $1,000. Now, if that trade turns into a negative trade, a losing trade, then it means that you are down now minus 1%, or your account balance is at $99,000. So if your account balance is at $99,000 and you're already down 1%, it's gonna have impact on you psychologically if you are not a profitable trader and you don't really know how ProFirm evaluation works and how you should be approaching the evaluation. It's gonna have a very negative impact. So what you're gonna be doing, instead of lowering your risk here at this stage because you're already down 1%, you just increase your risk, and in the second trade after losing the first trade, you risk 2% or 3%. Now when you are risking 2% or 3%, there is going to be a little problem here, is that first of all, you're increasing the risk based on the emotions. The emotions that you are getting after losing 1% of your account in your very first trade that you took on your funding challenge. Now as this decision is based on your emotions, so not only you're increasing the risk, but most likely you're going to be taking the trade based on the emotions as well. Meaning if market hasn't given you proper confirmations, that means no confirmations yet, and you are waiting for the trade, but you see market is moving either to the upside or to the downside aggressively, you will jump in. You will take the trade by thinking the trade, it's going to perform in your favor. And once you're going to do that, your risk is already too much. You are risking 2 or 3% and you're not even following your trading plan. And when you're jumping into the trade based on your emotions by thinking that you have to take the trade because you're already down 1-2% and you need to get back to break even, you need to be in profit so you can complete the evaluation, then you need the funded account to start making profits on the funded account. Now when these emotions are taking control of yourself and you're not even taking the trade with any confirmation, what's gonna happen? You're gonna again lose the trade. So now you're down minus 4%. Now when you're down minus 4%, what do you think is gonna happen again? This cycle, it's gonna continue until you will either hit 10% overall drawdown, or you will end up hitting 5% daily drawdown, and you will lose 5% or more than 5% in one single day. Ask yourself a question. If it did not happen to you, you just unsubscribe my channel. I am telling you the reason why you are most likely failing the evaluation is because of this thing. And I am sure if you ask yourself, if you have failed the evaluations, you will find yourself in this situation that you have done it many times. Now what I'm going to give you is the guide whether you're an aggressive trader or a conservative trader. So let's just say that you are an aggressive trader and you want to complete the evaluation as soon as possible. Now I want you to first understand one simple fact, that if you want to complete the evaluation as fast as possible, you're most likely going to lose couple of challenges before you pass the challenge. So what I want you to do, if you have money, that's my recommendation, only and only if you have money and you can lose $1,500 or $2,000 easily without any issue, and it will not really make you suffer in your life. So simply just spend $1,000 or $1,500 and take 3 evaluations. if you're going for 100k. Now if you're going for a 50k challenge, then of course the cost is going to be very less. So let's just say that you want to go for 100k. So I want you to take 3 account of 100k. Now when you're gonna take 3 accounts of 100k, you're not gonna trade them together. Highly recommended to just trade one account at one time. Now when you will be trading the account, you're gonna trade this way. So let's say that you are starting with a 100k balance. First, you need to create a trading plan if you haven't done so, or if you have a trading plan, you need to make sure that you're gonna follow. Now how your trading plan is gonna look like is, let's just say if I am to tell you my trading plan, it's simple that I wait for the breakout of market structure. So whenever there is a break of market structure on 1 hour and 4 hour time frame, then I'm interested in waiting for the trade on that specific pair. So once the break of market structure is happening on 1 hour and 4 hour time frame, then I'm going down to 15-minute time frame and I am waiting for the pullback. So pullback is going to be on the 15-minute time frame. That's my very simple trading plan that I use every single day. Now once the pullback is coming, there are few things that I want to see before I take the trade. Now what are the things? Like this pullback, it should come in a correction movement. Now what is a correction movement? Let's say that market is making a higher high and higher low sequence, and market just broke this higher high sequence on the 1 hour and 4 hour time frame. Now this pullback which is gonna come, first of all, it should come to this break of market structure that's in my trading plan, and it should come in this pattern. It's gonna come by creating these movements: miniature level of lower low and lower high, miniature level of lower low and lower high, until we reach this break of market structure, as well as there are enough sellers in the market. Once there will be enough sellers in the market, and I know that we have already at the price from where we very recently broke, and buyers, they made a strong new higher high. What I want here, I want the reversal to happen. Now once the reversal is gonna happen, market is gonna go to the upside aggressively. I'm not gonna take the trade from this price. I'm gonna wait again until market makes a retest to the level from where the reversal just happened. So once it's gonna retest in the same pattern the way it was pulling back, and this buyer's movement that is gonna happen is the same like this strong buyer's movement which broke the market structure, then I am gonna be executing my trade from here. I'm gonna put my stops here and target here. That's my very simple strategy, very simple plan that I follow every single time. Now once I have all these confirmations, the market is pulling back, the way it is pulling back, I wanted to see it's coming to the market structure area from where the break of structure happened. It's coming in a correction movement. There are enough sellers in the market. Then we have a reversal, and we have test of that reversal, the rejection from the sellers and buyers where they took the control. Once everything is there, then and only then I take the trade. So whatever trading strategy that you use, make sure that you are gonna follow your trading plan. It is must. We're only gonna be focusing on A+ trade setups. So once the trading plan is set, you know what you need to look for in the market. The next thing is gonna come that once you start the challenge, the very first trade that you're gonna take, you're gonna risk 1%. Now once you're gonna risk 1%, we have to make sure that the return is going to be at least 2%, which means your trading strategy should give you minimum of 1:2 rewards from every single trade that you're taking. Now the minimum reward is 2% because we are risking 1%. Now this trade is gonna come in two outcomes. Either it's gonna perform, which is yes, or it's not gonna perform. That means it's gonna be a losing trade. If it's gonna be a profitable trade, then we will be at 102k balance, which means 2% plus on the account. If it's gonna be a negative trade, then we will be at 99k balance. Now there is a difference, of course. We are in profits of 2k here and we are in the negative of 1k. So if we are in the profits of 2k, I want you to risk now the 2%, the $2,000 profit that you made from your very first trade in your second trade. So basically you're gonna use $2,000 or 2% on the second trade that you're gonna trade. That's when you are already in profits and you have made at least 2% profits. Now, if you have made 3% or 4% profits from the very first trade that you took, no matter what, you're going to be risking only 2% in the second trade. And there your target is going to be again what? Minimum of 2 rewards. So minimum of 2 rewards means you're going to be targeting 4% on your account. Now, when you're going to be targeting 4%, of course, again, there are going to be two outcomes which I will cover in a bit. Now let's just see first that what if your trade is a negative trade. Now in this situation, you're never gonna be risking 2, 3, 4%. That's must, and that's where you make a lot of mistakes. You over risk all the time. You will either stick to 1% risk. However, if you will feel that you are not really confident, then I recommend lowering your risk to 0.5%. So either 1% risk or 0.5% risk. And if it's gonna be 1% risk, let's just say it will have again one out of two outcomes. It will either be a profitable trade or a negative trade. Yes, there is a third outcome that it can be a break-even trade. Then in that case, we will not count this. So that's a different story. So if it's gonna be a negative trade, then definitely for sure you're gonna lower your risk from the third trade. But if it's gonna be a profitable trade and you have made at least 2% from this trade, that means your account will now be at 101k. So now in the next trade, you're gonna risk this 1000 and we're gonna target the same 2 rewards minimum from the trade. And if the trade is profitable and we are up to 3-4%, then the next trade we're gonna be risking 2%. So 2% risk on a trade is when you're at least up $2,000 or 2% on your account. So when you will risk 2%, again, as I said, the target is going to be 4%. So if it's going to be a profitable trade, balance will be at least at 106k. And if it's going to be a negative trade, then you will go back to break even, which means 100k. Now this is when you are trading aggressively the funding challenge. And we are on the phase 1. On the phase 2, you can repeat the same. You have to make a plan. What if your first trade works? What if your second trade also works? What if your first trade doesn't work, your second trade works, and your third trade doesn't work? Make a combination, and it's not going to take like a lot of time. It's going to take only 15 to 20 minutes, and you will have all the possible outcomes. However, the point here is once you are in profits at least 2%, then you're going to be risking 2% in the trade. However, if you're not in profits of 2%, then we're going to stick to 1% risk. And if you are down 1% in your account, then you have the option. If you're confident, you can risk again 1%, or if you're not really confident, then I want you to reduce your risk to 0.5%. And if you happen to lose couple of trades in a row at the start of the valuation, then make sure that you're not going to be risking more than 0.5% unless or until you are back at break even. So that way you're not gonna over risk and there will be less chance of you failing the valuation. Now that's when you trade aggressively. Now the reason why I said to you earlier on that you need to take at least 3 challenges of 100k is because there is a high chance that when you're gonna be trading with an aggressive approach, you're gonna fail at least 1 or 2 challenges. It happens a lot, and I have seen it happening to many of the traders who I know trade with aggressive approach. However, having 3 accounts at one time, it does not mean that you're gonna simply bend your own rules and take trades whenever you will feel like taking the trade. You still need to make sure that you are following your trading plan to the point. And if you pass the evaluation, you have 2 accounts in the backup. You can do the same things on those accounts while trading on the funded account. Now, how you will trade on the funded account, we will talk about in a bit. But let's first see the conservative approach. So now you are a conservative trader. So there is no need to spend $1,500, $2,000 on taking 3 or 400k challenges. Just take one challenge. Let's say that you're going with 100k account. Once you're gonna take the very first trade, 1% risk, that's the must thing, that you need to take the first trade with 1% risk. And in this, you have to target again at least minimum of 2 rewards. So once you're targeting minimum of 2 rewards, that means if the trade will perform, you will be up 2%. And if the trade will not perform, of course, you will be down -1%. So again, there are 2 outcomes. So the first outcome is that trade is working. And the second outcome is that trade is not a profitable trade. So in the case of profits, no matter how much profits you make, you need to stick to 1% risk on every single trade that you take. You have to make sure that you're not exceeding 1% risk and you are just doing 1% risk in every trade. So let's say this first trade is a profitable trade. So the next trade, which is second trade, you're going to risk again 1%. And you're going to target again 2 rewards. So once you're going to target 2 rewards, you are already up, let's say 102k at this stage. And after making 2 rewards on the second trade, your balance will be at 104k, which is definitely 50% of $8,000 or 8%. But that's the conservative approach, because you just need to stick to 1% risk. You have only taken one challenge. You do not want to lose that challenge, and you want to make sure that you are following your trading plan and your risk management plan. So that way there is a less chance of you failing the evaluation. Now that's when the trade is a profitable trade. Now what if the trade is a negative trade? That means now your account balance is at 99,000. Now what I want you to do in second trade, here you're not gonna risk 1% or 2%, not even 0.8%. The maximum risk now here is going to be 0.5%. And you're gonna continue risking 0.5% per trade on the challenge phase if you are in the drawdown, unless or until you are at 102k balance. Now here you did not increase the risk, of course, when you reached $102,000. But because you were risking 0.5% after you lost 1 or 2 consecutive trades at the time of you starting the evaluation, and you went down instead of going in profits, so you're gonna be risking 0.5% until you reach $102,000 of the balance. And once you reach $102,000, then you can start risking 1% again, and this cycle will continue. That's the conservative way to take the challenge, whether you are on phase 1 or whether you are on phase 2. Now what is the funded account approach, whether you're aggressive trader or you're a conservative trader? Now on the funded account, as it is now the funded account, you have completed the evaluation, you have your hands on your funded account. Whatever profits now here you're gonna make, you're gonna receive 80%, 85% or 90% of the profit split to you. So what does it mean? That you are gonna make sure that you're not gonna over risk, whether you're an aggressive trader or you're a conservative trader. So I want you to just risk maximum of 0.5%. This is maximum. So what I do, if let's say that I have 10% overall drawdown, I divide this into 25. When I divide this into 25, it means that I am not going to be risking more than 0.5% of my account on every trade that I am taking. And at this stage, I am making sure as well that I am only taking the trade which meets my trading criteria, as well as I have some confluences that I am ready to take the trade and there is a high probability of trade performing in my favor. So 0.4% risk is for me, because I know I'm never going to lose 25 trades consecutively. The only thing I need to do is make sure that I am following my trading plan. I'm doing my proper risk management. I'm making sure that I am following my trading strategy. You can risk up to 0.5%. Now in the case of 0.5%, if you have 10% overall drawdown, if you lose 20 consecutive trades, then and only then you're gonna lose the funded account, which is unlikely if you know how to trade and you can just simply stick to your trading plan. And as soon as you reach 2% profits on your funded account, no matter what the account size is, I want you to stop trading. No matter if you reached this 2% profit in the first trade that you took, or you reached 2% after 2 months of trading the funded account, I want you to stop here and wait now, as you have to request a payout. Payout time is at 2% profit, so that way you at least get your profit split to you and you have made some money here. Once you receive your first payout, then you can continue trading, and you can continue trading till every payout cycle ends, and whatever profit you will be generating at the end of that payout cycle, it can be a bi-weekly payout system, weekly payout system, or monthly payout system, you can keep requesting the payout. The point here, this is the maximum risk and this is my risk that I usually do on the funded account stage. So it's as simple as that. You just need to make sure that the guide that I gave you, the risk management, if you follow it every single time when you're doing the challenge, I can guarantee you're going to have higher chances of you passing the evaluation and becoming a funded trader. Now that was the video for the risk management guide. If you want to take the challenge, pass it and become a funded trader, let me know in the comment section what do you think about this risk management guide. And if you got any value out of this video, do not forget to hit a like and subscribe to the channel. And that's it from this video, guys. I will see you in the next one. Bye for now.